Okay, let's take a look at Camden Property Trust's Q3 2024 earnings call.
You bet.
I have their transcript here.
Uh-huh.
And some stock info.
Yep.
Ready to break it all down.
Sounds good. We can get a pretty good idea of the real estate market right now, especially for a big player like Camden.
Yeah, absolutely.
Mm-hmm.
Okay, so first off, the elephant in the room.
Okay.
Hurricanes.
Helena and Milton.
Yeah, Helena and Milton. They hit the southeast U.S. pretty hard recently.
They did.
But Camden's properties seem to have weathered the storm pretty well.
Surprisingly well. I mean, the CEO during the call got a compliment from an analyst who compared their buildings to Fort Knox.
Wow.
Camden's commitment to quality construction really paid off, and they were prepared.
That's good to hear. Especially as extreme weather becomes more frequent.
Right.
Beyond just luck. What contributed to their minimal damage?
They focus a lot on vendor relationships.
Okay.
Strong vendor relationships. And communicating with residents to make sure everyone was ready.
Got it.
That proactive approach, I think, played a big part.
Smart.
Yeah.
Okay, so now let's look at their development strategy.
All right.
Looks like they've decided to hit pause on 4 development projects.
Interesting.
What's the story there?
Well, this is where you can see their strategic thinking.
Okay.
They're not abandoning development.
Right.
They're being really selective.
Okay.
The main factors are construction costs
Uh-huh.
and rent trends.
So the numbers just don't make sense in those areas right now.
Right. They're really laser focused on capital allocation. They want to maximize returns. Instead of pushing forward with projects that might not be profitable now, they're going to wait for a better market.
Makes sense, yeah. It's a really dynamic market.
It is.
Now, their CEO also made a prediction about a surge in multifamily transactions in 2025 and 2026.
That's right.
Why does he see that on the horizon?
Well, first, there's a lot of debt coming due for developers, which could force some to sell assets. And second, investor pressure to maximize profits is going to play a role.
Okay.
This combination could mean a whole wave of transactions.
So it sounds like Camden might be anticipating a buying opportunity.
Yeah, they're watching the market closely.
Okay.
I think they're positioning themselves to jump on any deals that fit their strategy.
Okay, that makes sense.
Yeah.
Let's talk about Houston.
All right.
Looks like Camden's looking to reduce their exposure there.
Yes.
And DC as well. What's
Yeah.
behind that?
They want to reduce their concentration risk in those markets.
Okay.
Houston in particular, because it's so tied to oil and gas,
Right.
it makes it vulnerable to changes in energy prices.
Yeah,
So diversification is really important here.
makes sense.
They're looking to spread their investments across different markets. It reduces risk and creates a more stable foundation.
Makes sense. Now, in Q3, Camden chose to prioritize occupancy over raising rental rates.
Right.
How'd that turn out?
Their occupancy stayed really strong at 95.5%. But of course, this approach meant their rental rate growth slowed a little.
So a strategic choice to stay stable in an unpredictable market.
Definitely. They're focusing on steady cash flow and occupancy, which is really valuable when there's economic uncertainty.
Okay. Now on to some specific markets that are causing challenges.
Yeah.
LA and Atlanta. Seems like those are throwing them some curveballs.
Definitely some challenges there.
What's going on?
Both markets are having longer delinquency processing times,
Okay.
which is causing delays and impacting revenue. And then LA specifically is facing lower demand.
So operational hurdles and a demand problem in LA.
Yes.
Not a great combination.
Not ideal. Shows that even in a strong market, some regions can have specific challenges.
Yeah, absolutely. Okay, last one for this part of the deep dive.
Okay.
Construction costs seem to be leveling off while land values are down.
Interesting.
How is Camden responding to these trends?
They're adjusting their development approach,
Okay.
moving towards more suburban and less urban projects.
Right.
And they've also signaled they're open to acquisitions that might come up because of these market conditions.
So they're staying flexible.
Totally. You can tell they're focused on using their capital in the most efficient way, whether that's new development, acquisitions, even stock buybacks.
Got it.
If the opportunity is there,
Right.
they're going to take it.
Makes sense.
All right. Welcome back to our look at Camden Property Trust's Q3 2024 earnings call.
Yeah, we've gone through quite a bit.
From hurricanes.
Hurricanes, yeah.
It's those pauses on developments.
Yeah, it's interesting to see Camden's, emphasis on long-term value.
Absolutely.
Now, let's switch gears to their financial performance. The numbers, they don't lie.
They don't. Let's look at some of the key figures.
Okay.
First, Camden reported core FFO, funds from operations.
Oh, right.
It's a key metric for REITs, measures their operating cash flow.
Okay.
They came in at $1.71 per share for Q3, which actually beat their guidance.
Interesting. What drove that?
Well, they had lower operating expenses.
Okay.
Especially insurance claims.
Got it.
Seems like their efforts to reduce risk paid off.
Like those renovations and maintenance?
Exactly. Proactive moves like that can save a lot down the road.
They do. Okay, what about their guidance for the whole year? Any adjustments to their same-store NOI outlook?
Yeah, they kept the midpoint at 0.75%, but narrowed the ranges some.
Right.
Their full-year same-store revenue growth is now projected at 1.1% to 1.5%. And expense growth between 2.1% and 2.5%.
So they expect a bit less revenue growth, but also lower expense growth.
Right, a kind of balance.
Yeah.
They mentioned typical seasonality for Q4.
Okay.
Occupancy and rental rates.
Right. Speaking of Q4, what about their earnings guidance for the next quarter?
They're projecting core FFO per share from $1.68 to $1.72. So a slight drop from the midpoint, but nothing crazy.
Yeah, a little dip, but still looks solid.
Right. And they also talked about their balance sheet strength, which has, always been a plus for Camden.
Good to hear. Strong balance sheet's crucial, especially when things are, shifting so much. What's the update?
They're at a net debt to EBITDA ratio of 3.9 times.
Okay.
Very healthy.
Yeah.
They've got limited maturities in the next couple of years and a manageable amount to fund their development pipeline.
Okay, so financially, very stable, it seems. Gives them room to move if the market gets rocky.
Right. And they can capitalize on those opportunities if they pop up.
Yeah, absolutely. Okay, let's look at some of the questions from the analysts during the call.
Yeah, those can be insightful.
Get some extra color on their strategy. Anything stand out?
Well, one analyst asked about those 4 development projects.
The ones on hold.
Right. Wanted to know how much rents would have to rise to make them worthwhile again.
Getting to the heart of it. What did Camden say?
They stressed discipline in capital allocation.
Okay.
Basically said those projects don't meet their criteria right now.
With the current costs and rent trends.
Exactly.
So not chasing growth if it means less profit. Sticking to their guns.
Right. And another analyst brought up merchant builders.
Oh, yeah. Their impact on transactions. We talked about that.
Yeah, that potential wave coming.
Yeah. Camden's thoughts.
They acknowledge that merchant builders have a lot of debt maturing.
Right. In the next few years.
Right. And with that pressure from investors, transactions could really spike.
So maybe an opportunity for them to pick up some good deals.
I think so. It could be a good time for acquisitions,
Yeah.
especially for a company like Camden with their solid financials.
Makes sense.
Yeah.
They can afford to be picky. Now, there was a question about prioritizing occupancy over rental rate increases in Q3. Did they explain that decision?
They emphasized maximizing revenue,
Okay.
even if it means slightly less rental rate growth now. They seem to think high occupancy is key long term.
For stability and value.
Exactly. That long game again.
Yeah. What about those challenges in LA and Atlanta?
Oh, right.
Did anyone ask about that?
An analyst did.
With processing times and demand.
Yeah. Camden acknowledged those issues, but they're confident they can resolve them.
Okay.
Working on the operational stuff and watching LA closely.
So facing it head on.
Right. And finally, someone asked about the response to the construction costs and land values.
Yeah, that's a big one for their development plans.
Right.
What did they say?
They're open to shifting their approach.
Okay.
Maybe more suburban, less urban. And they're also looking at potential acquisitions.
Okay.
Taking advantage of those market conditions.
So staying nimble, always adapting.
Exactly. They're always watching the market and adjusting to maximize shareholder value.
It seems like it.
Yeah.
So after all this, what are some key takeaways for you?
Yeah. A few things really stand out.
Okay.
First, how they handled the hurricanes.
Their resilience.
Right. It shows their commitment to quality and to being prepared.
It's more than just the storms. It's about building assets that will last.
Exactly.
Right.
And second, their decision to pause those developments shows they're disciplined. They know how to allocate capital.
They're not afraid to make tough choices to protect profitability.
Right. And then them anticipating more transactions coming up shows they understand the market and they're ready to take advantage of it.
They'll be ready to jump when the time's right.
Right. And lastly, their focus on maximizing revenue.
Even if it means accepting slower growth for now.
Right. They're in it for the long haul, not just quick wins.
Yeah. Playing the long game. Makes you wonder, though, with all this in mind. Yeah, it makes you wonder.
Well, how will Camden navigate, the changing real estate landscape?
In the coming years. Yeah.
Right, with their strong balance sheet, their flexibility, and their market knowledge.
Yeah.
What will they focus on?
Acquisitions,
yeah. Or maybe restart those development projects?
Right. Or maybe, I don't know, will they stick with suburban areas or look at new markets?
It's like we've got all these puzzle pieces.
You do.
From this deep dive.
Yeah.
And now we need to see how they fit together.
Yeah. And there are a lot of things that could affect their decisions. Interest rates, inflation, people moving around, even working from home.
All of that.
Yeah.
It just reminds you that real estate's always changing. You constantly have to adapt.
Yeah, you can't just set it and forget it.
No.
So for our listener, what does this all mean?
Well, I think it shows Camden's in it for the long game.
Okay.
They're financially solid, they're disciplined, and they know how to adapt.
Those are good things.
Those are really good, especially when there's uncertainty.
Yeah, they're not just going with the flow.
No, they're making their own way.
Okay.
Of course, there's always risk with any investment.
Right.
But looking at Camden's history, their approach, their ability to change, I think they're well positioned for whatever's coming.
To deal with challenges and take advantage of opportunities.
Exactly.
Well, I think our listener have plenty to consider after this deep dive into Camden's Q3 earnings call.
I agree.
We talked about a lot.
Hurricanes,
yeah.
changes in development plans, market trends, financial performance.
We looked at their strengths.
Their weaknesses, their vision for the future. Hopefully that helps our listener decide if Camden's a good investment for them.
It helps them understand what's happening in real estate.
Right.
It's given us a lot to think about.
It has.
Until next time.
Keep learning, keep exploring.
And, as always,
happy investing!